Hi everyone, welcome again to Proving the Markets. This is Kojak's Pro. Today we're going to be looking into the Forex market to see what's happening across board with the currency pairs which I'll be analyzing here to show you guys exactly how to go about trading them in the new week to come. Now I've made it a point of duty to come here every week to give you guys the best bias and directional flow of the market. And the reason I do this is because I want traders to have clarity. I want you to be able to see this market differently, because most traders go about their chart time and their trading executions absolutely the wrong way. I mean, does it make sense when you are taking a lot of trades when you know that you don't have a clear path, your strategy is not on point? Because believe it or not, profitability, apart from it having a psychological undertone, which a lot of traders don't know, and it's the major cause of a lot of issues, we still have the technical aspect when it comes to strategy. So if you don't have the right strategy, if you don't have the right methodology to engage with this market, you are not going to get anything from it. As simple as that. So profitability is two-edged. Your psychology needs to be on point and your strategy too needs to be on point. Because I know this week a lot of traders lost money. Like I see it on the charts. Listen, you don't need to be active in this market to be profitable, like taking a lot of trades, over trading. You need to be selective, and it's only when you're selective that you can actually fish out the best setups, and it's those best setups that will help you to become profitable. You don't take all setups. You need to find the ones that actually give you the flow you want. And that's what I do here in Improving the Markets. I show everyone how to exactly follow this market by virtue of structure so that you can be able to make an informed trading decision that will help you in your trading week. And that's what we're going to do in this video now. If you're new to this channel, subscribe. Now, without wasting so much time, let's get into the chat. Now, I'll start up this session with Euro USD. Now, Euro USD last week was trying to give us a setup to trade it. This one I talk about being selective with your trades. I mean, USD came here and created this double bottom right at the monthly level. So this double bottom, which also means a retest of that level, would have seen Euro USD to the upside. Now, we didn't get a clean setup right about there. Now, Euro USD went all the way up like so. And the funny thing is that usually I want to take this kind of trades because of where we've retested this zone, which is fine, which is what I was looking for. But we're not getting the best setup. And I was seeing a lot of issues. I had a lot of issues with USD with this move to the upside. First and foremost, I'll tell you for free that the retest we're having here, right about here at this level, was looking a little bit steep, quite steep. I wanted the retest to kind of even out and space out so that it can give us the ability to be able to trade it. And the next thing was, we had this gap here. So anytime the market gives a gap like this, whenever I see a gap like this, a jump between two candlesticks, I'm very, very averse to looking for opportunistic trades following it, because the market will always want to come back and fill up this gap, which is what it did here. And then that alone, in the process of filling it up, it didn't give us a very good, it was giving us a skewed pullback. But nonetheless, a retest should have seen this to the upside, but Euro USD instead came here and stopped and decided to fall back to the downside. Now, what occasioned this move? Like normally a break and retest should see this move to the upside, but the chart will always leave clues. Now, the clues now for this Euro USD chart is something that I skipped earlier on. I don't know whether it was an oversight, but if we go over to the weekly time frame, we'll see something that clearly happened on the weekly time frame. Now, on the weekly time frame, we can see that Euro USD, after a break above this monthly level, it now came to create a pin bar. Now, this pin bar was present at the time I made the previous analysis, but I didn't comment on it. And the reason I didn't comment on this pin bar is because we had a solid break right higher. And this is the weekly time frame. So a chart pattern formed here, which was an inverse head and shoulder, which formed here. And the monthly level, which is in beach here, was broken by this strong weekly candle, this bullish weekly candle. So that was confirmation. That was confirmation. Now, in the process of retesting it, we now created this. So because of we had already strongly cleared this level, I was not too keen about interpreting so much on this pin bar. But apparently the pin bar was strong enough. And maybe it's because of this pin bar that formed that made the setup we were anticipating for on Euro USD to be skewed. Because this is just mass human psychology. When you see a pin bar like that form, it just means that there is selling pressure. Sellers are in control, and retrospectively you can see that sellers control this market back down. I mean, we didn't even have a chance to trade USD upside. So Euro USD was pair that didn't give us the right setup to trade it, and that's fine. What am I looking at for on Euro USD? I'm going to be frank with you. So I'm coming back to the weekly time frame to show you guys what Euro USD is doing. Now, since we've come back here on Euro USD, I'm not too keen again on looking at any trades at all for Euro USD up until we clear this level. Now, if we clear this level to the downside, obviously we're going to see Euro USD come down here. Now, although this trade now will mean that we are going against the flow of the river because the monthly time frame is bullish, but because we've had a chart pattern here and this is considered this neckline, if we break that neckline, means that the chart pattern didn't hold and the sellers will be in control. So nonetheless, in this kind of trades, I'll usually reduce my risk because anytime I'm not trading in line with the overall bias, I'll reduce my risk. Now, on the flip side, I will also get interested again in trading Euro USD. I mean, if we still come back here, I mean, I'm not interested anywhere around here to trade it. Once we do come back and break above this zone and then have, you know, a clue to go up, I'll follow Euro USD to the upside. And this is the kind of setup, this is the classical setup I love to trade. Now, that's my take on Euro USD. And if you are interested in trading USD this week, make sure you look at the insights I'm doing out here. I mean, these are useful nuggets to help you to see the market clearly and then make wise trading decisions. It makes more sense clicking buy and sell buttons just to see whether you can have a chance to get something out of the market. Trading is not gambling. I mean, you should separate the two. If you approach trading in a gambling fashion by taking too many trades or taking too many trade executions, you are not going to be profitable. It's not going to pay you, and that's what I'm against. I want you to be able to trade profitably. So that's my take on Euro USD. Without wasting much time, let's go over to GBP USD. Now, GBP USD, I pointed out in my last video, the pin bar that formed on GBP USD actually held true, and you can see that this pin bar that formed on a key level, which was the weekly key level right about here. So that pin bar formed here, and then I told you guys that we will not be surprised if we see GBP USD fall to the downside, and it did that. Now, GBP USD was meant to continue rally to the upside after this break here because this was a key level. Now, after we broke below this zone and retested it like quite convincingly, because if we go over to the forward time frame, you can see that we retested this zone. So this was the break below, and then this was the retest. You can see that GBP tanked back to the downside. Now, why did GBP come back to this level? I'm going to show you guys quickly why this level is very important. So I'll go back to the weekly time frame. First and foremost, you see this level right here. Don't play with this level. This level is a magnet. You see strong level because there have been a lot of reactions in the past in this level, and we're going to count it now so that you can see them. We've been up to 8 reactions in the past. So this is 1, this constitutes 2, 3, 4, 5, 6, 7, and 7, 8. And now this is going to be the 9th reaction. So GBP USD, after we retested the zone, it was a no-brainer that we're coming back here, and the market just tanked quickly to the downside. I mean, it could have been a good trade to take. Like, would have actually been a good trade to take. But the fact that I was trading against the trend, it didn't entice me to take such trades because I've seen a lot, and more often than not, although sometimes it will play out, it doesn't play out always, especially when you are trading against the flow of the river. So I made my decision to skip the trade, and that goes back to me being selective, and that's how to actually go about this game. Because when you're selective of your trades, you know how to actually trade well and then trade profitably. Now, what's my take on GBP USD? I'll be frank with you. This market is not the exact scenario of a ranging market. This market is not ranging, like GBP USD is not ranging. And the truth is, if this is not a ranging market, what I'm seeing here on the chart actually, because I'm seeing this on the weekly time frame, actually resembles an inverse head and shoulder, to be frank with you. Because this is going to be the left shoulder, this is going to be the head, and then the right shoulder formed around here and went to the upside. So given that I didn't break this zone and it's coming back to retest this support level right here, I will not be surprised if GBP USD holds around this level and blows up the way to the upside after we take out this trend line. Now, the reason why I think this is so is because we are not ranging. If we are ranging, there is no need even anticipating a buy on GBP USD. But because I've identified that this doesn't look like a classical ranging market, then I might be open to putting my money on this trade. However, more and more conditions will have to be met before I actually decide to hop on such a trade. But this is the potential for GBP USD, and this is what I'm actually seeing on GBP USD. I'm anticipating a move to the upside, but that will only happen if this if we get more confirmations right about here, and then this trend line is eventually taking off. That's how I want to follow GBP USD. And the truth is, if GBP USD does break, I need space. I actually need space. If GBP USD breaks above this trend line and eventually meets this level, once we take out this level, we're going to aim here. So that's how we'll trade this pair. And GBP USD, given that we are starting from this supply level here, if we aim all the way to the next monthly zone, you can see that we have about 760 pips to catch on GBP USD, and that would be a good trade to take. So without wasting much time, let's go for the next pair, gold. What's actually happening in gold? Gold now has been bullish, and a lot of traders get confused when they come to gold, especially if you don't know what's happening on the high time frames. Because to trade gold profitably and amass a lot of pips, you need to target a particular level, start with the smallest stop loss, and then take your trade all the way. Now, this is going to show us an example, because you can see that gold has been messing around this level for a while now, reacting here like solidly. We all know that gold is bullish. I want to see some trades from this level, like up, back to the upside. That's how I want to trade gold. Now, are we getting such opportunities? Now, let's be very critical about this. Now, this is the 4-hour time frame. So given that this is a retest, first and foremost, the trend is bullish. Now we're having a retest on this zone because we trade the break and retest strategy. This is a good retest here. However, the market has stuck around there for a while. And also we are having a Fibonacci play. So this is what is making me confident about an intended bullish move for gold. So this is a Fibonacci play. You can see that gold is sitting very well on the 50 Fib area. And not only the 50 Fib area, it's also sitting on the support level, which was run there. So this is a classical break and retest, and we have broken above the 50 Fib level. So I'm actually looking at a gold trade to take very soon. And not only that, we've also created something that looks like a double bottom right here. But I will not be pulling my trigger yet for gold because of this movement. You see this movement right about here. It also means, if you look at it clearly, it might also mean a head and shoulder on the 4-hour time frame. So this is a head and shoulder, with this also being a neckline. So you are interpreting both ways. So the only time I'll be comfortable to take a trade to the upside on gold is simple. If we clear this level here, then I'll be confident in taking gold trades to the upside. But we've not done that yet, and I am a very, very conservative trader. I like space. I don't like trading into obstruction. That's the way I trade. And when I've identified an obstruction somewhere, I percolate to ensure that I place my trades with the best possible probability. And that's it. So that's how I'm aiming for gold. Now gold is likely to do that. Until it does that, I will not be touching gold. Let's touch briefly on oil. Now oil did something funny. Now we're having issues with knowing where oil was, what oil wanted to do. I mean, I was struggling in the lower time frames to tell what oil was planning to do. But when I now came over to the monthly time frame, guys, the monthly time frame, the high time frames will always show you what to do. Like zooming out to the higher time frames will tell you exactly what the market is doing. Once the lower time frames becomes cluttered and you don't really understand what's happening, just zoom a level up. So if you're trading in the 30-minute time frame and you don't understand what's happening there, zoom to the 1 hour. If you're not understanding what's happening in the 1 hour, zoom to the 4 hours. If you're not understanding what's in 4 hours, just keep on going up a level, like 4 hours to the daily, daily to the weekly, and then weekly to the monthly. So I couldn't really tell what was happening on oil last week until I now zoomed out to the monthly time frame and now saw that oil was creating a double bottom on the monthly time frame. This was huge. I was very quick to show this to my Telegram community, and I showed them this last week Friday when this was happening. And we know very well that a chart pattern, once the neckline is cleared, the trend will continue to move in the direction of the chart pattern. So in this case, this is a double bottom on the monthly time frame. It's screaming bullish reversal. So that was exactly what oil did. So I'll just come to the 4-hour time frame to show you guys exactly that. So after this break above this level, we can see that we had a retest of oil right around here and the level, and then oil continued to move to the upside. So oil literally moved from $70 a barrel to $92 a barrel. And it's not rocket science. The monthly time frame showed that. And if you saw this, you would have capitalized on this as well. So this is how we roll. The higher time frames will always tell us what to do, and then we'll follow the direction in the higher time frames. As simple as that. So that's it on oil. Now the next pair we're looking at quickly is GBP/JPY. Now I'm going to be frank with you guys on something. Now GBP/JPY has been bullish, and then you can see here that we're still bullish. Even on the weekly time frame, we're still bullish. However, we got to a monthly level. So after the market came to this monthly level, it created this triple top right around here on the monthly level. but this happened on the daily time frame. Extreme top was created, and then we saw GBP/JPY back to the downside. Now GBP/JPY came back to this place and then retested this level. So this is a key level. Now I'm going to point out something. In the 4-hour time frame, having come to this level, it now came and created. So it now came and created a chart pattern right about here. A chart pattern right about here. So this is an inverse head and shoulder, with this being the left shoulder, the head, and the right shoulder. I made a video a few weeks ago on how to spot chart patterns, and I went in depth in that video to show you guys how to spot chart patterns, not only on the high time frames but also in the lower time frames. Now this is the lower time frame, this is 4 hours. Now when I spotted this, I was like, okay, so since we have a neckline right about here, so this is a neckline or chart pattern, I just need a break and retest of this zone to tell me that we're ready to go. Now the market did exactly that. So not only did we break the zone, we came to retest it right around here. So we tested it twice, and then the market has gone to move to the upside. Now I also spotted that we had a Fibonacci play. So this is from swing low to swing high. You can see that the market came and married this level. The market broke out of the 50 Fibonacci area and also broke out of the neckline. That's why we are seeing a move to the upside consequently. Then we now saw a bullish engulfing candle here that emerged, and that's why we're now having this movement to the upside. Now GBP/JPY is going up, guys. The next target for GBP/JPY is 212.359, and that's how we roll for GBP/JPY. So simple. You see how I read price? Plain, easy. Once you have a system of reading the market, every other thing becomes easy on the charts. And that's all I'm about here. Like, show you guys exactly what's happening in this forex market and show you how to actually approach it from a methodological standpoint. I am not an unorganized trader. I trade with clarity, and the only way to go about trading this market with clarity is to understand the basics of price action. Now, if you want to really understand how to trade this market the way I do, I'm going there on how I do this in a free Forex Master class section, which I have already done for you guys. So if you want to see how to do this, I have a free Forex Master class that's going to show you exactly how to trade this Forex market using a simple system. So if that's something you're interested, click the link in the description of this video and go and learn how to trade. Now, the next way I'll be talking about is NZD/USD, and the reason I want to talk about NZD/USD is just something I want to point out. Now this is the weekly time frame. NZD/USD came and created a double bottom right about here. We broke the first level, we've also broken the next level. Now after we broke above this level, we not only cleared this level here, we've also cleared this inner trend line right about here, and the market broke above the trend line, and that was the first level, and then we broke above this. Now that being said, we have now come back to retest this level here. Now I'm going to point out this is a classical break and retest. Now with the next point, we're moving with NZD/USD to the upside. Now why I'm interested in our upside move for SMD is simple. First and foremost, we have retested this level properly. We broke this inner trend line. We have created this momentum to the upside. Now the market has come to retest, which is a pullback to give us the opportunity to enter into this trade. If you know how to enter this trade, you'll get in here. Now your first take profit will be here, and then the next take profit will be at the monthly level. Why I'm also interested in our upside move, because this is also a Fibonacci play. Watch out, you can see that we are reacting nicely around the 50 Fibonacci area, which also coincides with the support level. Now we'll find this setup here and we'll take this pair to the upside. As simple as that. That is my take on NZD/USD. Did I take up to 3 minutes in analyzing this pair? No, this is a less than 5 minutes analysis, and it's simple and it's straightforward. Now this final pair, I'll use this final pair to close this session. Last week I came on here, so you can see that no one knows it all the time in this market. I came on here last week to talk about the trade we had on AUD/USD. The market got shy of our level and stopped us out. So we actually had a loss on AUD/USD. So I think we entered somewhere around here, and the market didn't get to our take profit, and then this week just came and blew us out. So this happens not all the time, but I want to be transparent here so that I can show you guys that I am not immune to losses. Like, I also take losses, but my losses are small compared with my profits, and also I apply proper risk management. Now this trade was a no-brainer, so you can see that it came shy of my first take profit. Like here, it came shy of it and then just blew all the way to the downside. It's fine, because most of the time it goes, sometimes it doesn't go. What do you do in this kind of situation? You accept the loss. That is data. That is feedback. Now, where a lot of traders make a fuss about this is now being highly opinionated about their trades. They will be like, this trade almost got to my take profit. What the hell is happening in this market? Forgive my slang. What exactly is happening in this market that is giving me so much profits and almost got into our take profit? And all of a sudden, the market turned back and stopped me out. I mean, this used to infuriate me. This used to infuriate a lot of traders. And then it pushes them to emotional trading. They see them taking trades, trying to force more and more entries right about here. and this is where you're going to meet your Waterloo. Because if you now force more moves to the upside, by the time you saw this market going up again, if you now took a trade to the upside, you can see that the market would have just stopped you out again. This is the market. If your setups don't work, don't force it. If you try the first time and you didn't get your profit, leave that trade. Allow the market to do what it wants to do, because most often time than not, if the market is not ready to go, it's not ready to go. And if you're a savvy trader, your stop loss, the market hitting your stop loss will tell you exactly that the market is not ready to go. You leave it. So ADS, it gave us a loss, but that's fine, because we've still made a lot of profits this year so far. And that's it on ADSD. I will not be looking at ADSD to trade until it shows us a direction. So that's my take on this session. If you got value from this video, put your comments down so that you can see it. Comment the lesson you learned and how you want to be trading your next week, and I'll respond accordingly. Join the masterclass and learn how to trade well. If you want to learn how to read market structure, I've made a previous video. You can watch it right here.